Hello everyone, welcome again. Now only benefits left in our lecture is as far as employment income is concerned, these two benefits which I will try to explain with the help of an example. Now this one is the benefit of the car, which I've already shown you through the notes, but we will do a little example here as well. And on right side of the board, this example is relevant to accrued income. Now, accrued income is also the one which we have seen in the previous video. Now let's look at the benefits of the car first. Now, as I said, that employer can give you a car, so that it is one of the benefits, including any other benefits as well. So if employer gives you the car, you drive the car. Now it depends on how much the value of the car is, how much you have contributed towards the car. Then we will be able to calculate the benefit of the car. Right. Now the normal formula, it's very easy, and it's very common in the exam as well. The easy formula and the normal formula to calculate the benefits of the car is, first we take the list price of the car. Now the list price is simply the market price. It will tell you in the question as well that this is the list price of the car. Right. Now it will tell you the list price of the car, so you'll take the list price. Then what you would have to deduct is a contribution. Now a contribution means that the list price of the car was £25,000. Say for example, if it was a nice car and you like that car, but its market value was £25,000. Now what happened is that you said to your boss, all right, okay, if you are going to give me the car, then I will pay some amount towards the car, but please give me that specific car. Say for example, you like Audi, and you said, I want that specific model of Audi, and you were going to give me the car anyway. Please give me that car, and whatever the excess amount is, I will contribute towards the amount of the car. Right? So likewise, it can happen. So what will happen? We will take the list price, which will be market price of the car, and we will have to deduct the contribution. Now remember that we are calculating the car benefit of the employee for employment tax purposes, right? So that's why we're calculating the employment benefit. So we take the list price and we deduct the contribution. The contribution is the amount which employee has contributed when buying the car, right? Now there is a condition on deduction of the contribution. Maximum we can deduct out of the list price. Maximum contribution we can deduct is £5,000. Right. So the maximum amount we can deduct is £5,000. £5,000 max. So we'll take the list price and we will deduct his contribution, whatever the employee has paid towards the car. Then what we need to do is we have to multiply it by a percentage. Now this percentage will depend on the car, which car it is, and how much environment friendly it is. So the more environment friendly the car is, less percentage will there be here. All right. Now say for example the car was not environment friendly, then obviously you will have to pay more tax. It will be calculated as higher tax benefit. Higher tax benefit means you will have to pay more tax. Now 16% is a standard rate. Now if say for example if your car emits 95 grams per kilometer of the CO2 emissions, then you will have to take 16%. That's 16% here. All right. That 16% is standard, as I said to you previously in the previous video. Standard is 16%, so we will assume that it is it is more than 95 grams. Now if it is 95 grams or more per kilometer, then we will take 16%. If it is less than 95 grams, then there are different percentages I showed you in the previous video as well, which you can see on your notes. All right, so I will take 16%, which is the standard one. I might have to take different if the car is emitting less or less grams per kilometer of the CO2 emissions. Then what we need to do is we have to add something to it. So we'll add again I need to do the I will have to see exactly grams of the car, so how much the car is emitting and how much the car is environment friendly. Now say for example there was, it says in the question that car was emitting I don't know 130 grams per kilometer, then we will write down 130 here. So what I mean to say is we will write down whatever the figure is, the emission of the car. All right, then what we need to do is we'll have to deduct again. 95 is the standard one, as I said, so we will have to deduct the 95 and then we will have to divide it by 5. By dividing it by dividing it to 5, what we get is a small figure, so which we can take it as a percentage. All right, so we will take 16% plus whatever the figure is which will be given to us in the exam, less 95 divided by 5. So that will be the figure, that will be the percentage which we will apply to this amount. All right, now there is another complexity here as well. Say for example car was not a petrol car, it was a diesel car. Now if it is a diesel car, then we will have to add extra 3% into it, extra 3% of the percentage. Now say for example whatever the percentage comes here, there is another condition as well. The maximum percentage it can go is, maximum percentage will be 37%, so it cannot go in excess of 30%, so the maximum it will be 37%. Now say for example if our percentage goes 40%, the maximum we can take is to 37%, we cannot take more than that. Like in the case of contribution, if the employee has contributed, say for example 10,000 pounds, we can only deduct 5,000 pounds while calculating the tax benefit. And obviously if the car was provided for less than a year, then we will have to proportionate that as well. So we'll take the months for which the car was provided, then we will have to divide it by 12. Right? It's as simple as that. Now let's look at this question, and it is very easy example. I just made it up just to test your understanding. So a diesel car was provided to James. So first thing is that it is a diesel car, so we will have to consider this percentage as well. So a diesel car was provided to James with list price of 30,000 pounds. So list price is given to us, of which James contributed 7,000 pounds. So James has paid 7,000 pounds towards the car. Now car emits 190 grams per kilometer of CO2 emissions. Now this 190 gram will go in here. All right, and was available for 9 months in a tax year. Now car was available for less than a year, and then it says James contributed 200 pounds per month towards the fuel as well. I'll just write down as James. Now as far as fuel is concerned, whatever the employee contributes towards the fuel, it will not be deducted at all. There is a standard amount which we have seen in the notes, 22,100. That is the standard amount, so we will have to deduct that standard figure. All right, so we will not have to deduct this amount if whatever amount he has paid towards the fuel. All right, so shall we start then? We'll just pick up the figures and we'll put in our formula. So 30,000 pounds is the list price. So 30,000 pounds less how much? He has contributed 7,000 pounds. Remember, we can maximum deduct is 5,000 pounds. So less 5,000 pounds, and multiplied by, it is 190 grams, so it means it is more than 95 grams. So we will definitely take 16%. If it would have been less than 95, then we would have put a different percentage, right? Then we will plus how many grams? 190 grams. So we will write it down as 190 less 95 divided by 5. So and we will also add 3%, and in case of months, these are 9 months, so 9 over 12, because it says 9 months here. So we'll put the 9 as well. So let's do it on the calculator. It is 190 less 95 divided by 5, 19. Now this is 19, so 19 plus 16, 35 plus 3 extra, it comes to 38%. All right, So this figure is coming to 38%, but remember, maximum we can take is 37%. All right, so maximum we can take 37%, so we'll take 37% of that. So what we do is 30,000 pounds less 5,000 pounds, 25,000 pounds multiplied by 37%, and we will have to multiply it by 9/12. That comes to 6,938, if I did not wrong. 6,938, that is our figure, that is our answer. Please make sure you redo it on the calculator. I might have made a mistake, but please make sure you do redo it on your own calculators, right? Now this was the question of benefits of the car. Let's move to our other example, which I've given on the right side of the board. Now this is relevant to accrued income. Sorry, before we move forward, please make sure you do this, because in the requirement it says what's the car benefit of JAM, then the fuel benefit as well. So car benefit is 6,938, we know that, but we need to calculate the fuel benefit. So whatever the percentage is, maximum is 37%, although we calculated at 38%, but the maximum we can take is 37%. So we'll take 37% of whatever the amount was, 22,100. So we'll take 37% in while calculating the fuel benefit. All right, because we cannot deduct whatever employee has contributed. All right, let's move to our next example, which is of accrued income. Now I told you in the previous video when we were reading the notes that when we sell the securities, especially if we talk about the gilts, government securities, because they were exempt from capital gains tax, so what used to happen was that there was no tax at all. Right? Now the new scheme, which is accrued income scheme, accrued interest scheme, it was basically part of P6, but then they put it into the F6 as well, so that what the accrued interest is as well. All right, so before it was part of P6 syllabus. So what happens is that when you sell the security, because the security pays the interest, now interest is sometimes received 4 times a year, sometimes twice a year, so it depends. Now what happens is when you sell the security, when it depends on when you are selling it, say for example interest was paid in March, say for example, and you are selling it on February. Now because when you sell the shares, when you sell the security, whoever the buyer is, they will benefit from the interest, won't they? Because say for example, if you sell the security and interest will be paid next month, now because you are selling it and they will benefit from the interest, not you, next month. Now obviously because you are selling it with the interest, then you will obviously sell it for a little higher price, right? Now in order to avoid that, why I am selling it higher? Because I know that they will be paid interest next month. That's why I am selling it higher. Now if I am selling it higher just before the interest date, then whatever the higher amount is, that will be considered as my interest income, and I will have to pay tax on that. Right? So that is the way to do it. Now just pause the video and read this question and try to do this, try to give me the answer. I'll just read out to you so that you can just have a go at it. Peter purchased £100,000 worth of gilts, which is the nominal value, and which pays interest at the rate of 3%. So interest is paid at the rate of 3% for £120,000. Interest is paid twice a year, on 30th of June and 31st of December, on nominal value. Now, Peter sold gilt on 30th of November for 121,252 netter. Now he has sold it to netter just before the interest date. Now, interest will be paid on 31st of December, whereas he is sold on 30th of November, so 1 month before that. Although he is selling it before interest, so if we look at the question, he won't have any interest income at all. But because he is selling it a little expensive, so we will, the tax authorities will say whatever amount you are selling it higher for, that will be considered as interest income. Now in order to see that how much his interest income will be, we will have to calculate the interest amount. So nominal value is £100,000 multiplied by 3% is the rate. That comes to £3,000. Now that £3,000, what we have to do is, this is for 12 months, right? But he's selling after 5 months, because the previous interest payment, if you look, it says interest is paid on 30th of June and 31st of December. Now he has already had the interest on 30th of June, whereas he did not had the interest on 31st December, because he's already selling on 30th of November. Now how many months after the previous interest date? So he has interest on 30th of June, so 30th of June, so July, August, September, October, November, these are 5 months, all right? So he's selling it after 5 months. So what we consider is that he has interest of 5 months. So whatever the amount is, so £3,000 multiplied by 5 over 12, that's 1,250. So that amount will be included in Peter's interest income. Now although he did not have any interest income at all, but because he has sold it after 5 months, so because he is just selling before the interest date, so we will assume that he will sell it at higher price. So we will have to calculate his interest income. So that is the accrued interest income, and it will be included in the savings income of Peter. Right? Now what happens is, although that is of Peter, what about Netta? Now if we look at the Netta's interest income will be £3,000 divided by 2, because it will be of 6 months. Now apparently Netta will receive interest income of £1,500, which is of 6 months, which she will receive on 31st of December. Alright, now apparently she will receive the interest for 6 months, which will be £1,500, but into her savings income we will only have to put 1 month's worth of interest, because that's what she had, because she paid extra for the shares, extra for the gilts. So she will only have to pay tax on 1 month of interest, and 1 month worth of interest will be included in the savings income of Netta. So £1,500 multiplied by 1 over 6, which comes to £250. So for Netta, £250 is interest income. Alright, now if we total that, 1250 plus 250, it comes to £1,500, which is interest for the 6 months anyway, which will be paid on 31st of December. Now that is the only why we are doing it, in order to see that where to put this 1,500, because obviously it is interest income, but we will have to account for that out of this £1,500, how much is related to Netta and how much is earned by Peter, and we will have to pay tax. We will have to account for the tax accordingly. All right. Now, why? Because the interest income for Netta is £250, and interest income for for Peter is £1,250. We will have to see that which part of the this £1,200 falls at which band of Peter and Netta. Now say for example, if this £1,250 falls within the basic rate band of Peter, then he will also be eligible £1,000 worth of nil rate band. So while calculating the accrued interest, we will also have to see that if he is eligible for nil rate band. Alright, if you want to note down the answers, please make sure you do that, and just pause the video and do that. That's it for this video, and I will see you in the next video with more interesting stuff of ACCA F6 taxation. That's it, and I will see you in the next video. Thank you and goodbye.